think at the heart of investing in Australian equities is really a view on Australia as a country. And I think Australia is a great place to invest. We're one of the fastest growing economies in the developed world. We have great institutions. We've got a government which has actually, got good balance sheet. We have really well-run companies, and you put all that together, you have a market where, returns can be good. There's lots of opportunities. As an investors, you can take a really good long-term view and make good money for your investors. And, that therefore means it's a really good part of any diversified portfolio. We're very fortunate at Pendal to have an investment team of 19 people. And if you look at the experience, on average, they have 23 years in financial markets and 15 of those years actually as part of the Pendal group. So we're a team that comes with, a lot of understanding both of markets overall and of industries. And that's really critical because markets are very volatile. There's a lot of sort of emotion that comes with investing. And if you've got the experience and you've seen many cycles, you've lived not just through COVID, the financial crisis, but also the crises of the 90s, sort of like the emerging market crisis and so forth. You have that sort of understanding of how markets operate and actually step in to take advantage of those disruptions to actually make good investments, and also identify when maybe the markets are getting too frothy and there's too much sort of hubris in the market to step back. And I think that sort of wisdom is really important for investing. The other thing that having that degree of sort of scale of resources and the sort of experience that we have is that it just gives you that insight into specific businesses. You've got this sort of history of how that company's performed over many, many years. You know the people who've run these businesses, so you've seen them not just in their current roles, but in their previous 2 or 3 roles. And so you know how they operate, you know whether they are in a position to sort of solve the challenges that they're facing, or whether you feel perhaps they are too optimistic in terms of their outlook. And so having that sort of granular understanding of not just the industry, but the company and the people running it, I think is really invaluable for our investment process. A really important part of our investment approach is the philosophy we take to investing, and we have that across the team. So the first of say 3 key principles is being open-minded, so that you want to make sure that you're always considering all the facts that are available to you, and if something changes, you need to be prepared to change your investment view, because it's a very dynamic sort of process. The second feature that we think is really important is critical dialogue, so that you are prepared to have your views tested, because as detailed and as careful as you may be, you may have missed something. And if you have people who've looked at it, not just the industry you're covering, but other industries, and has got a lot of experience, they may pick up on something that you've missed. And having that extra level of sort of due diligence, I think, can really sort of help make our investment more robust. And then the final thing is just being aware of your biases, because we're all human. And we're all prone to sort of having preferred and less preferred companies and people and management, and therefore you need to be really careful that you're not got these sort of entrenched biases in your portfolio. And so we really are very careful about assessing the sorts of companies that we have in our portfolio and making sure we don't have too many biases, too much thematic risk in our portfolio. And I think that allows us to deliver much more consistent performance over time. Our priority is to continue to deliver for our investors, and that means consistent investment returns. And that's something we've been doing for 20 years, and it's been built on a process which is identifying well-run companies that are going to continue to surprise the market on the upside. And they can be large, small, value growth. We're looking across the market, and it's continuing to stick to that process that's worked for those 20 years and ensuring that we keep going and we keep, very disciplined, and we sustain that, because if we do that, we can deliver the sort of returns that we've seen over the last 20 years and continue to do that for many years to come. Yeah, the Pendal Focus Fund is a high conviction best ideas fund. So it's taking all of the ideas from the 19-person investment team, and it sets a very high bar. So maximum sort of 30 stocks that can go into that fund. And so the threshold in terms of the conviction and the quality of the idea is very high. Now, when we put those ideas together, we're very careful to make sure that we get a nice blend of ideas, because we are a core manager. Now, what does that mean? That means that we're looking for ideas from across the market. So we want both large cap companies, smaller cap companies. We want companies that have high growth, but we also are happy to own value companies. And so if you blend that the right way, what you're able to do is get a lot of stock specific risk. And what that is it means that you get a lot of consistency in your performance, because you're not relying on the cycle, you're not relying on the sort of themes in the market. You're just finding really good companies that are delivering better than market's expecting and doing that consistently over time. And so that's, in our view, the real appeal of this fund, is that you get both the high conviction, but you also get conviction and consistency together.